Welcome to the Rate Update with Dan Frio. I am Dan Frio. Today we're going to talk about, really, there's no economic data out there, but the Federal Chairman Powell spoke yesterday, and he said they're going to do whatever it takes, even 50 to 75 basis points of an increase in the federal funds rate, and how that's going to trickle through the economy and the markets. Well, let's find that out next, so don't go away. Welcome to the Rate Update with Dan Frio. I am Dan Frio. Today we're going to talk about the Fed, because there's no economic news coming out today, but the Federal Reserve Chairman Powell spoke yesterday in front of a committee, and he said that they're going to probably increase federal funds rate by 50 basis points this time. When he said, well, it's on the table, that's basically an inclination that they're going to do that. One Federal Reserve voting person actually said, no, 75 basis points shouldn't be off the table. So let's get into the news. The first thing we see here is what the economic calendar is for today. Well, the good news is there's nothing. There is nothing today on the economic calendar that should really affect anything. So the good news there is, well, mortgage rates should stay stable. Well, you might be surprised. But let's go to the first thing. What we were talking about is the Federal Reserve. They spoke yesterday, Federal Chairman Powell, and right after he spoke, this is what happened. The 5-year Treasury went up 3 basis points to 3.03. Okay, why is that important? Well, it's actually starting to invert or continue to have an inversion of the yield curve. When this rate there, let me just explain this for you. This is known as a yield curve inversion, which investors sell out of short-term bonds in favor of long-term debt, indicating a lack of confidence in the health of the economy. So basically, it's an indicator on how the markets anticipate the economy doing for the next 3, 5, 10 years. Well, the inversion takes effect right here. You can see where the numbers should go chronologically up. Okay, it should be basically say 1, 2, 3, 4, 5, 6. Okay, so let's see where the inversion is. 0.8 to 2 is good. 2 to 2.1 to 2.7 is good. 2.7 to 2.9 is good. Well, 2.99, and then this is where we have the inversion. Not huge, but it's an inversion. Basically, the 30-year Treasury yield is less than the 5-year. That's what they call the inversion. That's usually a great indicator of that we're heading into a recession. Okay, so that's the only news out today. So let's go over to why you're here. What's going on with rates? Well, in that area, we start out with the MBS market. This is the mortgage-backed securities market, the bond that trades on Wall Street. That is the biggest component. The yield of this is the biggest component when it comes to mortgage rates. So we see here it's down 0.25. And if you know the channel and you watch me all the time, you know that's not a good number, because what happens when the MBSs go down? Well, it pushes up the yields on the bond, which is upping the yield or the rates on mortgages. So when this number goes down, it pushes up yields. And because it's a mortgage bond, it's pushing up mortgage yields. Okay, so the rates are going to go up. So let's see how that's trickling over to the mortgage market in regards to rates. Well, here we are. So we go through here, and I'm going to go through this cell real quick with you just to explain it in my lingo. Then I'll explain it to you in English, and then we'll go across the board. So the 30-year fixed right now is up 11 basis points, coming in at 5.38. It is costing you 0.4 to get that, and we are at a 52-week high. Okay, now in the English version, or the most common sense version, or Mortgage Rates 101, we have the 30-year fixed rate right now coming in, and this is the national average published by Mortgage News Daily that you're going to see right up in here. These aren't not my rates, and this is just a benchmark to follow. It's like the Dow Jones. Just because this is what the rate's posting doesn't mean that's what you're going to get. Kind of like a stock. Let's use this as our trigger. If this is going up, then your rate's going to go up. So if, like the Dow Jones, if the Dow Jones is up, well, most likely your stock's up, but not in the same increment as the Dow Jones. I'll explain it that way. So we go across here again, 30-year fixed. It's up 0.11 in rate than it was the day before. So the day before, this would have been 5.27. Okay, so now it's up to 5.38. It also is going to cost you 0.4 in points. So how does that work? Well, basically, this is like prepaid interest. Let's put it that way. So what you do is you take your loan amount, let's say 100,000, and then you multiply it. You do 100,000 on your calculator times 0.4, hit the percent sign, and then hit equal. that's exactly how much it would cost you to get this rate. Okay, and you can see that we're at the 52-week high. So that's how I explain it. So we'll go across the board here. We got the 15-year coming in up 17 basis points at 4.79, up with also a cost of 0.4. We have the 30-year government loans, which incorporates VA, FHA, and USDA, coming in at 5% right on the button, up 0.2. It's up almost 0.25%. So when I tell people, hey guys, it's not out of the cards for mortgage rates to be 0.5% higher, a month or two from now. Well, heck, in one day it went up almost 0.25. So put that in perspective. We go to the 30-year jumbo. It's 4.59, up 19 basis points. Again, that's almost up 0.25%. Then we have the 5/1 ARM, the adjustable rate mortgages, coming in at 4.25, up 11 basis points from the day before. And that one's coming with 0.5 point. And you can basically go across the board right here. We got a 52-week high, 52-week high, the high, the high, the high. Everything is hitting a 52-week or a 1-year high. If you go through the charts here, we're higher than we were more than a year ago, more than 2 years ago, more than 3 years ago, going all the way back to who knows when. And then you go down through here, what's the sentiment for today? Negative. What does that mean? Well, they're expecting mortgage rates possibly to get a little worse. All right, that's that report for the day for rates. I just want to let you guys know I did relaunch my Credit Scores and More website. If you're needing anything when it comes to credit scores, you can get your credit score, your monitoring, repairs, counseling, and so much more. Just go to creditscoresandmore.com. I actually created this website. You can go down through here and get a free credit score. That is Credit Sesame. So if you already have it, you don't need to click this. The true scores right here is you'll actually get your FICO score. Your FICO score is this credit score all lenders use. Doesn't matter if you're getting a mortgage, a car loan, a credit card, insurance, anything. They use this score. Okay, you can go there. Let me click it for you real quick. This should be the number one thing you do. You go down through here. If you use this link, you get 20% off. You can get one credit score for $15. You can bundle all three. I don't know what it costs you. It is a great investment because at least like we did over here with mortgage rates, this gives us our benchmark. At least over here, this is actually your credit scores that lenders use. So if you do not want a hard credit pull on your credit, or you really, really want to know what your credit looks like that the lenders are saying, this is where you go. So if you'd like to find out more about me and my team, please visit us at therateupdate.com. There's many ways you can reach out to us. You can go up here, give us a call at 844-775-5626, apply online right up in this corner here. Book a meeting, or you can even do chats with us right now. And I'm one of the ones that you might be chatting with, believe it or not. So that is the report for today. I'll give you a midday report to let you guys know where rates are for today. And then I might be leaving a little bit early today. My wife's coming back. I haven't seen her in a couple weeks, and I'm going to pick her up at the airport. So God bless, guys. Thanks so much for taking the time to watch. Thank you guys for everybody attending the YouTube live yesterday. It was a huge success. And I'll see you this afternoon. Take care.